When you get people saying Forex na sporty bet wey wear suit, na because of say majority of them no really understand wetin lot sizes mean for Forex. Shey you understand ba? That gamble part of Forex na here e dey. I know say one of my classes in the Forex terminology class, I make reference to lots. Shey you understand? But in this video, I wan really explain everything that has to do with lots and how you go fit take advantage of am. Shey you understand ba? In your Forex journey. This particular guy here, na wetin you need to study carefully if you don't want to be a gambler in the Forex market. Shey you understand? Because this guy here is someone that has to do with your finances. Shey you understand? He no get handle, but if he beat you, you go cry. And the truth be that Forex na scam, Forex na scam. Na this guy. Forex na sporty bet wey wear suit. Na this guy. So in this video, let me explain lot sizes so you go fit understand them and then you go fit act accordingly in your trading journey. Now, wetin be lot? Just see this guy here as your investment. Lot na your investment because it is something that has to do with your money. It is something that has to do with your capital. The money you bring into the Forex market. And remember, you are a trader, you are a business person. You have to bring in money to make more money. Do you understand? So the bigger the money where you bring, the bigger your earning. Do you understand now? So we have 4 types of lot sizes. We have the standard. So we have the standard. We have the mini. We have the micro. And we have the nano. Then here, we have volume. And here we have unit. And lastly, we have the dollar per pips. So you understand now? But I go arrange everything. So this particular one, so the volume now 1. So you understand? And the unit now 100,000. So you understand, ba? This mini now 0.1. This one, micro, now 0.01. Why this one? Now 0.001. So this particular guy, they very useless. The unit of mini are 10,000. The unit of micro now 1,000. The unit of nano now 100. So you see as you follow. So in a simple time, Forex, so is the amount of currency you are buying or selling in a trade. So you understand? Think of it like this. If Forex was a store, a lot is a pack size of what you are buying. So these are the packs. These are the packs: 100,000, 10,000, 1,000, and 100. So for instance now, once if you make use of this standard lot, it means you are buying 100,000 units. So if you use it on euro now, you are buying 100,000 units of euro, then you are trading it against US dollar. It's as simple as ABC. Now, let me explain how this particular guy now work with your money. So let's say for instance now, you have $100. So you understand? And again, pips. I don't explain pips before, but let me still take pips again. Pips, now the change where they happen in price. So as market they come up for 1,000 to enter 1,001, 1,002, 1,003. Now the pips be that. So from 1,000 to 1,001, 1 pip. From 1,000 to 1,003, that is 3 pips. So you understand? So now let's say you have $100 account now. Now which of these lot sizes you think says you go fit use? You go fit use this one. So you understand? Mini lot sizes. Which means say per pips of mini lot sizes, now waiting, now $1. $1. Per pips of standard lot, now waiting, now $10. Per pips of micro, now 10 cents. Per pips of this one, now 1 cent. So you understand now? So now if you are making use of 0.1, it means say as market they come out for 1,000 to 1,001, you are earning $1. From 1,000 to 1,005, you earn $5. So you understand? And the same thing goes to this one. From 1,000 to 1,001, you earn $10. From 1,000 to 1,005, you earn $50. So you understand. So let's say, for instance, now you now have $100 account. The ideal lot size wey you suppose use na this one, and your stop loss suppose be 10 pips. So which means you're risking 10 pips as your stop loss, and that 10 pips equals $10. So you understand now. 10 pips equals $10 because now this one you dey use $1 for 1 pip. So you understand now. Per pip is $1. So $10 stop loss will give you 10 pips. So how many pips you suppose target as your take profit? 30 pips. That is 1 to 3 risk reward ratio. That's how we calculate them. So in Forex, you bring in some money. You bring in your $100 to make $300. Let me just put it that way. You are ready to let this particular guy here, this is your amount of money, you are ready to let it go. Do you understand? But you want to invest with it. You want to make money. But anything can still happen to this particular money here. But in order for you not to just lose it like that, you now do waiting. You now start taking it small. Now, inside your $100, you are risking $10 to pursue $30. So you understand that now. You are risking $10 to pursue $30. That is how lot work. So if you use this guy here, your stop loss will be 10 pips, your take profit will be 30 pips. Now, can't imagine say you no can't use this one, you can't jump to this one, which I know say no dey possible. You know if you use one standard lot on a $100 account, even if your broker give you unlimited, I know say dey possible, sha, but it is not advisable. Now gamble with that. So you understand now. Now, but it's possible now, as this one be 0.1 for many, it is now possible to scale it up to 0.2, to 0.3, to 0.4. Now let's now assume say you no can't use 0.1, you can't use 0.3, which means you dey risk $3 per pips. Because now one be this one. If you use times 3 of this particular guy, you are risking $3 per pips and you get $100. So you see say you know this smart enough. So it will take you just three trade. You don't already blow your account. So you understand how this thing they work. So now here now the gamble part of Forex start. If you know sabi use this thing, you dey gamble. Now I want you wait for it. Come get say if you blow your account just now, make you come see better setup, but you don't get capital again. So to avoid it, you need to just apply wisdom. Before you can use this guy, you need to at least have $1,000 in your account, which means with your $1,000 now, if you're risking 10 pips, you'll be risking $100. So you understand that now. Your risk with 10 pips on this guy here will be $100 to pursue waiting $300. You know hard. But greed now will now make you to double this one. You use 2 lot sizes. So you understand? You will now use 2 lot sizes on this one, which is still possible. But it's just good. Know your limit. Know your strength and weakness. Should you get size? That's what you did for Forex. Know your size. Go for your size. Don't say because say you want to buy Lamborghini and then you now see your Lamborghini inside $100. It's not possible, even though it is possible. Do you understand? But as a beginner, you're not supposed to see yourself like that. Your aim now to turn this $100 now to $200. First, scale up your account. Waiting for the need, then Forex need big capital. I don't lose 50 lot size for my trade before. I post them online here. 50 lot size, I don't use them. But how much you think I get for account? I have $100,000 account, and I use 50 lot sizes because I'm a professional to some extent. I feel use them, but I'm not sure if as a beginner you go figure that mind use 50 lot size. If not, if you go feel use them, then I gamble with the gamble. Because if anything bad should happen to that trade, your money is gone. The next thing, Forex is a scam. Forex is a scam. Forex na sport way suit. So you understand now? Now they make the mistake most of the time. This thing get rule. Just follow the rule. When you supposed to use this guy, use them. When you supposed to use this one, use them. When you supposed to use this one, use them. But I don't advise anybody to use this one. There's no point. Bookman no trade. So you understand? So that's what it just be. With this one, if you target 10 pips of this one, it's how much? Just $1. The 10 pips of this one are $1. Do you understand? So with time, you can scale up your account with this guy, but you cannot do the same with this one. But the best thing is to just get, at least start with $100 account, which is this one here. Scale up over time. And if you know you're a risk taker with $50 account, you can still use this guy. So you are risking $10 on $50. So you are taking the risk, but at least in the positive side. So which means now you can still use 0.2 on this guy. That's if you really want to take risk. You take some calculated risk. After you are done with your analysis, then you can just use 0.20. And that is 0.2. That is you taking risk on your $100 account, but not you using 0.5 or 1 of this particular guy. You are gambling. So you understand? I believe this is my today class. Don't really explain what lot sizes mean and how to apply them. Now, if you get $100 now, you use this particular guy, you use this one as a day like this now, it will take you how many times before you blow your account? If today you take trade today, you lose $10, you still have $90 left. Tomorrow you enter trade. If you win tomorrow's trade, you are making $30 plus your $90, that is $120. So you are making profit, you are making progress. So with time, this your money will scale up to $200. And by then you can be able to risk 0.5 and 0.3. Because definitely you don't get good small. That is a sign. You can now say, okay, I want to use 0.3 on your $200 account. And before you know, that money will turn to 500. But don't just jump to this particular guy. That one is a disaster. And you don't want to experience it. So if you're enjoying today's class, you know what to do. Subscribe to my YouTube channel. And don't forget to like, to comment, and to share. I'll see you around.